Let's bring in Gerard Cassidy right now. We're going to have a quiet chit-chat about banks.
Sure.
The correlation here of equity markets to your decades of experience with banks, small banks, mid banks, big banks, isn't this just about demand? Isn't this just about nominal GDP?
I think it is. In fact, many folks are looking to the banks to grow revenues, and when GDP is not growing very fast, it impacts the banking revenues. Because, as you might recall, Tom, the credit quality continues to improve for the banks, which is driving bottom line earnings.
Tom Brown of Second Curve Capital sat here the other day and said he'd buy Bank of America for no other reason than it's cheap. And I know that's an unsophisticated statement by me, but you got to look at book, and you got glorious charts. And no, folks, I won't send out the RBC Capital Market fancy log charts with balloons and quadratic functions. Forget about all the mathy stuff. Boy, they're cheap.
Oh, they are cheap. And in fact, price to book, when you look at the banks today, they're as cheap as we've seen in a number of years. And going into a slowdown, typically the stocks are trading at much higher values than where they're trading today. But you're right, it's not only price to book, but price to tangible book. We have Citi trading below tangible book value, which we think is very attractively priced.
Is that your single best buy of the big banks?
Of the big banks, we would go with Citigroup. It's trading below tangible book value, very attractive.
Let's get ready, Sarah. Here's the question of the day. It's a question of the day. On the present Citigroup price, 36.03, is there a tipping point if it comes down where it becomes painful for Citigroup? 35, 32, 28?
Yeah, I wouldn't necessarily say it would be painful for Citi. Yes, they're unhappy where it's trading today, of course. You might remember this is a reverse stock split, so this is really
$3.60.
There you go.
Thank you. You and I are the only two that get that. It's a $3 stock.
There you go. And so it was very painful for them, of course, when it got down to $1. We're not suggesting that, of course, at all. But the opportunities for them are I think, very great globally once they get rid of some of the problems that they're having.
Very good. Let's look at this chart. Too much information here. We've shown it a gajillion times. The Keefe, Briette, and Woods chart, stock selection. Okay, a lot of people are saying that's going to trend and not be pretty. I want three names right now: small cap, mid cap, and PNC, which I know is your big cap choice. In this carnage, where can we go for value that's well run with best practice management?
I think one of the names to look at is SunTrust. When you take a look at this company, they got caught up in the real estate downturn in the southern part of the United States.
The Dow's going up. Keep talking.
There you go. And what's interesting is they've just implemented a serious cost savings program that will save over $300 million in costs. And on top of that, you've got the lower credit costs. And we think that because they're in the growth part of the country.
Small cap.
Small cap, Webster Financial out of Connecticut, WBS. It's about a $20 stock. They, too, are starting to show some growth. They also have a very large shareholder in Warburg Pincus, which has done very well with their bank stock investing.
Do they have a new attitude from management? You know, the thing with small banks is they like their cushy jobs, play golf on Thursday. You know, you go play golf with them. But is there somebody there motivated to get it done?
I think Warburg Pincus would certainly support that kind of motivation. And in our view, they're an ideal acquisition target for somebody like TD.
PNC Financial, here it is. I look at these as economists. To me, that's Stuart Hoffman. PNC Stuart Hoffman. PNC Financial, value in perspective growth. It does look like a better chart than many banks.
It does. And in fact, you know what's interesting, Tom, this time around is the Midwest economy is doing well. The manufacturing jobs. An interesting side note, last year was the first...
Keep talking. The Dow's doing better.
Last year was the first year since 1997 the United States created manufacturing jobs. Their National City acquisition was a home run for PNC. Now they're seeing the benefits of that economy.
Why do we all go, okay, when can we have consolidation? What is holding back bank consolidation?
The primary factor holding it back, in our view, is the new accounting. Everything has to be done under purchase accounting, so you have to mark-to-market your loan portfolio, and the marks are so large, that's holding it back.
There's a plaque at the Heinz Center in Boston where I completely bombed purchase accounting. August is math-free month for surveillance, month for surveillance midday. What is wrong with purchase accounting? Isn't that clear, more transparent accounting?
Oh, absolutely. I would not say it's wrong. It's just that it forces the buyer to mark, and because of the downturn we just had, it's delaying the M&A activity. M&A is coming. We're going to see consolidation in the banking industry. It's just taken slower than we would have anticipated.
prices go down like this, markets, the bonds where they are, the 2-year yield 0.2842%.
Incredible.
The emotion out there. What is your advice for our viewers that don't have your decades of enjoying losses here and there and a lot of gains? What's the main wisdom today?
Today, I think the fear is what's going on over in Europe. That's one of the big concerns.
Christine Harper said the same thing.
Regional banks don't have European exposure. So therefore, this is a great buying opportunity. Interest rates will eventually go up as the economy recovers here in the U.S.
Thank you so much for coming in. Sarah, make a banner of that. Cassidy, regional banks don't care about Milan.